Alright, morning everyone. Okay, analysis. What I said in the Discord this morning, the daily analysis I'm referring to, where we would drop into the Asian fair value gap here, like that, and then probably drive above back into the new day opening gap. That played out perfectly, so well, yeah, I just thought I'd mention it. Hourly chart, you'll see me using these first presented PD arrays, that's from November, but it's not really that relevant at the moment. We have traded into this daily order block. This one, that daily order block. And then if we go to the lower time frame, you can see that we reacted very, very well, perfectly from these new day opening gaps from October. Then we're traded back up into this volume balance. We're kind of being pressed down a little bit by that right now. We've got the new week opening gap levels that we're going to be keeping an eye on, and then beyond that, nothing really on the 4-hour chart is of interest to me. Hourly time frame, same thing, but this from the 4-hour is just a couple candles. On the 1 hour we have a lot more information. So we see that it displaces higher, it stays above the area of inefficiency with the bodies, and then it gets this last little rally higher, and then now we're waiting for the market open in another 5 minutes. 15-minute chart, same thing, but we have a bit more detail on what that imbalance that it stayed above was. It was the Asian one, and beyond that we're just sitting on hands and waiting. I'm not really going to be too focused on the chart until around 10 o'clock because we have PMI, so that's going to be where you want to put your focus after 10 o'clock. You want to let that news event come out and then find a silver bullets up, which is what we'll be focused on today. Asia, very large range, 236 handles, and then that when Asia's a really large range, it gives the indication that London's not going to be a very good session to trade. And as you can see, London was only 95 handles, which sometimes pretty large, but relative to Asia, it's less than half. So when you have a really large, elongated Asian range, you want to dial back your expectations for London. But because London was a little bit lower, we dropped down into the Asian inefficiencies from the 15-minute chart, and we'll get this rally higher. It leads me to believe we'll probably have a pretty nice AM session, especially with the 10 AM ISM PMI. 1 minute chart, I'm going to look at the pre-market range. That's our pre-market low, and these are our pre-market highs. This is 138 handles, so it's going to reveal nice, well, I can't say it for sure, but at the open we should get some nice moves. because of our regular trading hours gap. The closing price is 25,567.25. Let's do this. Well, it's a small opening range gap. Okay. Good morning, good morning, good morning. W candle colors. Yeah, ICT's colors are back. My colors are too confusing for the newer traders, so guess we're using the ICT ones. Use bright green, could use middle, could use dark. Okay, 4 minutes till market open, and we have these really smooth relative equal highs up there. If it's going to be bullish, I don't think we should take this low for bullish, because it's an intermediate term low. So ideally we stay above that. Morning lumber. Okay, we're going to use this as our dealing range. And we're going to go nah, it's too confusing. It's too much on the chart. Okay, we'll just filter it for discount and premium then. Okay, so we're trading around premium of the current dealing range. I'm not going to refine it down to time just because of how much more relevant the low from 6 o'clock is. So we're going to use that 6 o'clock low and the 8:43 relatively equal highs for our dealing range. I want to see it trade into the lower half around here, and then potentially get a run higher for silver bullets. If we get something very clean at the open, I may take that, but I think the majority of my focus is going to be after 10 o'clock's news event. I think we can eyeball this level. Okay, we've got these short-term lows inside these inefficiencies. Fix the latency as well, so there should only be a couple seconds between my chart and your charts. Okay, a very small opening range gap, so it may be a little bit choppy until that news comes out. when you have a really small one, you don't need to keep the levels on once it's been filled because uh, like the quadrant levels are just not going to be that relevant. You're mainly going to want to focus on the upper half and the lower half, which when it's this small, you can kind of eyeball it, so you don't even need it on the chart. You can have it, I guess, but at the same time, you don't want to be operating with a really cluttered chart. You want to have something more minimalistic, and that allows you to focus on what's happening at that immediate moment. Okay, I think we'll probably take this pre-market high. Dollar index, full target's been hit. And on a lower time frame, nothing. Okay. First thing you do, if you just want to have it's not very frequent, but if you want to increase the probability of your trades, you wait for that first presented fair value gap to appear, and you don't trade the first 20 minutes of trading because that's the opening range. You want to chill out, let that form, let all the retail traders get their orders in, get stopped out, and then it's a lot easier to have a clearer picture on what's going to go on. So if you're struggling with trading market open, instead of trading market open, wait until around 9:50 at least. Let that macro give you some algorithmic footprints that you can work off. Plus, on a news day, it's generally going to be less than ideal condition to trade until that news event comes out. ISM services PMI 10 a.m. That's all you want to really just sit on your hands until that comes out. And then we've also got Trump speaking, but that shouldn't affect anything, hopefully. This 15-minute order block's really good. That's a 15-minute fair value gap that behaved with institutional for entry drill. So if we take the minor sell side here, then it may have a little bit of a prolonged, it may stay down here for a while before it gives us a reversal. Like it wouldn't just be straight down, straight up. Plus this order block there. So that makes it high probability. Not that I'm looking for this to give us a setup, but just considering it. especially if we can reclaim it later on. Like if it trades below, goes into the pre-market low, and then displaces higher, and then reclaims it, that would be good. Okay, so taking out these relatively good lows with quite a long wick, so we don't need a body to close below that. Generally, you might, but because it's a long enough wick, you don't need it. That's a potential entry if you're looking at the pre-market low. I want to be aligned with buy side though, the buy side delivery. That's going to be the higher probability trade. Okay, that should give the necessary reaction to displace lower. If it's going to be bearish, if it disrespects that, then it may be reversing from the gap. So we'll see. You want to let the body close before you make a decision on that though. Because it could just be waking up, reclaiming the order block, and then going back. So let the body close. You want to see that keep inverting some PD arrays. So if we can invert this bullish order block, that would be fine. Get above the yen dog, use the yen dog lower support, that would be good. It's still better to wait for news though. It's a nice looking V shape. Good signature for a reversal. It's got a strong draw to the upside. That should deliver, but you have to keep in mind that we have 10 a.m. news. So it's a lower probability. It doesn't mean it can't happen, but if it doesn't happen, it's your fault. Like, you can't put the blame on the market because you know there's 10 a.m. news. You know that the safe bet is to just wait for it. So like this is not a sign of good delivery. You don't want to see wicks that are elongated to the upside. If you're bullish, you want to see them to the downside, like that, and then it leaves a wick there. That's a sign of stopping out scared money, and then trades higher. This is a suspension block though. And this, you can say this is the first presented fair value gap. You can, but it's just so small that I would want to look to the next one. I'd use this instead. So that'd be my first presented fair value gap. Take this order block off since it's not really contributing that much useful information. If you're in buys, the fact that it's left its wick there at the N-log lower quadrant, which is also a little bit below the halfway point or consequent encroachment of the elongated wick here. That's not good if you're in longs. There you go. It's low probability to try and force anything before 10 AM news comes out. That's why you want to wait, because that looked like the most obvious buy, but then with 10 AM news, you have to dial back your expectations of what the market's actually going to do. It's not going to be willing to deliver as easily as you want it to, because it can still deliver, but on a day where there's no 10 AM news and it's got low resistance conditions, it should just ride into that high. But on the day with 10 AM news and we're 20 minutes before it, even if it wants to go there, it's gonna be weird about it. It may go there, but it's not going to be ideal. It's not going to be the trades that you want to have. You want to be in the low resistance stuff. That first fair value gap is 10 points, still not big enough to be first. Yeah, this one's big enough. Generally though, it's not based on the handle amount, it's based on relative to the size of the candles around it. So this, relative to the size of the candles around it, it's very small. We wouldn't really consider that, but this one's a lot bigger. What's a suspension block? A suspension block is a subcategory of fair value gap, where you have a volume imbalance on both sides of the candlestick. So ordinarily you would say this is the fair value gap, because you'd go from wick to wick, and then the price delivery without any overlapping bodies or wicks, that's the inefficiency. But with a volume imbalance on the upside, you have to include that volume imbalance as well. And then if you have one on the downside, on top of that, then you go from the body of the 937 candle to the body of the 939 candle. So it's body to body instead of wick to wick, because there's two volume balances on either side of the candle. So that's a suspension block. And they're usually pretty good. It's called a suspension block because this candle is kind of suspended in the air. I don't know if that analogy will help you, but you see how it's not attached to that body. It's not attached to that body, it's just suspended at that level. That's why it's called a suspension block. It's a newer thing. It was installed recently in 2025 ICT's later videos. Thanks, I usually mark the fair value gap with the volume bounce. Makes sense. Good, good, good. What do you think about the PA today? I think we're going to get some high resistance conditions with the small opening range gap, because if you go to your regular trading hours chart, and look at that, it's a very, very small opening range gap. You want a bigger one normally. So probably a bit high resistance, and then we'll see what the 10 a.m. news does. It's ass. Yeah, because there's 10 a.m. news and it's a small opening range gap. After 10 a.m. though, I think there'll probably be a couple nice setups. You can see this is a market maker buy model. That's a good buy. But 10 a.m. news, I'm going to restrict myself. Because even though, if it was good conditions, I would take this like that. Like that. But because we have 10 a.m. news, I'm going to restrict myself. I will leave it there. Just for journaling purposes. Yo, let's see. Look at that RR. It's 1.5, it's not that big. The only reason I don't take this is because 10 a.m. news. So I want to align the probabilities to be in my favor and be in the most low resistance conditions possible where it doesn't need to have these deep retracements. Because like I said earlier, it will want to deliver these highs, but it's going to make a fuss about it. It's not going to do it in a clean, nice one-sided way. It's going to have a deep retracement like that. And it's possible it does another thing here, returns back to the first presented fair value gap, and then keeps delivering up anyways, which I don't want to be a part of because we have that 10 a.m. news and it doesn't need to deliver in a low resistance manner 13 minutes before news. That's when the market can be high resistance, and if you take a trade and it goes against you, but it's still going to your profit target, but it's having these really deep retracements, you get frustrated, it's tilting, it's not the type of trade you want to be in. You want to be in something. Yeah, that's the weirdest path ever. You want to be in something like that. Like that. And the 10 a.m. news gives you a characteristic that can be a little bit like this normally. So, yeah. Yeah, that delivered with basically no drawdown. I wonder how many people took that. There's 21 people watching. I think 2 people just passed death-funded accounts from that. Yeah. I scalped that first leg after 15-minute fair value gap rejection, done for the day. Nice. Nice. I just got a 1 to 2 and then hit break even. That's good. Zach took it on paper, fair enough. To be honest, I don't really care if people copy these trade ideas. It doesn't bother me at all. Yeah, I don't care. I have to say it though, because legal reasons. Yeah, legal reasons. Okay, I want to see this have a willingness to continue higher because on the higher time frame perspective, this here was the low risk buy. So this here is original consolidation. That would be the small mini reversal. Oops. At the key level, being the daily order block, new day opening gaps. It's given us this intermediate term low. That would be a low risk buy. So if we're looking at it from that lens that I mentioned this morning, this could be the longer term trade, which may take 1 or 2 days to deliver. So in accordance with this trade idea, I would want to see it continue higher. But yeah. What I'm doing is marking every swing point, and this This isn't me saying, oh, take profit there, take profit there. It's just so that I can get a gauge on the lower time frame if we're willing to keep trading through these highs, or if we're going to want to sweep one of them and then get a potential short-term retracement on the 15-minute. But a retracement on the 15-minute is going to look like a complete sell-off on the 1-minute. But because we have this mitigation block here, we've got a low, a high, a higher low. These 1, 2, 3, 4 down close candles are a mitigation block now, so it can displace higher and then trade back into this mitigation block, which is on the 15-minute chart. But then if you're on the 1-minute, that could take you out of your long positions. So you just have to be aware of those things. That's why it's important to incorporate into your trading indications of strength and weakness. Say you were in longs from down here somewhere, and you don't want to hold it until these relatively good highs, which I wouldn't. I'd want to settle for like the new week opening gap high being like my full profit until that moment. Like that would be best case scenario. If I'm holding longs, I've already reached my buy side objective, being the pre-market relatively equal highs. Then we have the higher time frame stuff that I can keep running through and into. What I would do if I'm holding a position beyond my profit target because of the indications of strength, like all these breakaway gaps that we're seeing, that indicates that we're going to keep trading higher because we're seeing these fair value gaps left open. Generally, you should want to rebalance those, but if it's not doing that and it's just leaving them there, it's a sign that you're going to keep trading higher. So say you're long from here or from there, and your best case, because you're holding runners, is up here. That's not saying you're going to take the trade-off at this exact level. It's not saying you have to wait until this. It's just saying that in the best case scenario, it trades all the way to that high. What you'd want to do is take a partial at each swing point, which gives you a measure of, or a fourth candle that's a down close candle. So if we have a swing point, this is a swing point. We have a high with two lower highs. So a lower high to the left of it and a lower high to the right of it. That's a swing point. You don't just take the partial at the swing point when it forms. You take it if the fourth candle after that swing point, because this is candle 1, this is candle 2, this is candle 3. The fourth candle, if it's a down close candle, it may be looking to run back into a gap or an equilibrium, anything really. Even just a short-term discount. Short-term meaning not the entire range, but like the range of the impulse pricing. If the fourth candle is a down close candle, that would be a partial, and then if it's not and it keeps trading higher, this is your sign to keep holding it and keep holding it and keep holding it. You took your partial. That's why you gotta listen to Valeric. No, it's a good partial if you took it. You want to pay yourself first. Oh yeah, we are inside of the macro. Okay, this may be another day of missed trading opportunity for me. I want to take trades in front of you, but I'm not gonna force it. I'm doing them how I normally do them, but I'm done for the day already. Would you add to your position at the 950 candle if we didn't have 10 AM news? 950. I wouldn't add beyond my initial profit target unless I had something really, really obvious that's going to massively trade higher. Nah, I wouldn't add. Because you're already in a very deep premium relative to where you were, or relative to where it may go, because this may be discount an hour from now because it trades all the way into the current week, new week opening gap. But based on where your trade is, you have to keep in mind that, if you pyramid your trade here and your initial entry was somewhere around here, that entry price is going to get brought up all the way to this price, and you want to be at break even. You don't want to have any risk left on this trade. This should be a risk-free trade. It's already gone past your initial profit target. If you're holding it for extra, extra scratch, that's good, but you don't want to be bringing your average position price up. You want to have it somewhere in a safe spot that it can be running at, above break even, and you're not worried about it. Because say you do pyramid it at the 950 candle and your entry price gets brought up to here, or say here, for an example, you want to be break even on that. I would want to be break even on any trade that I've caught in this massive displacement. I wouldn't want to have any risk on. But if I did, I'm looking for something more ambitious, I have to strangle the stop loss on my trade now because I brought my average position size up. Whereas what you should have done is left it alone, let it run, and you don't want to be strangling your trades out of the desire to not want to lose money on it. Okay, that dealing range that we marked out earlier is broken through. It did trade into the discount, which was just at the 15-minute fair value gap, so that's the importance of dealing ranges. It was a protected low here, the intermediate term low. How do you know if there's going to be a protected level in price? If we have something like this, where we have a large impulse price swing, consolidates, it trades into it, and it gives you this intermediate term low. An intermediate term low, if it reacts like this to a fair value gap, that's an intermediate term low, to put it simply. I'm not even meant to be teaching in these, but oh well. That, if you are going to be bullish, if you have a bullish bias, is a protected level. It shouldn't want to wick through this. There are certain situations where that would be an exception, but you want to just see it trend higher. You don't even want to see optimal trade entry reached. You just want to see it stay above equilibrium, trade higher and higher and higher. A lower time frame, when you're looking for these entries, it's fine to look for discount entries and stuff. We're nearly at the end log. Here, suspension block. Okay, we have 1 minute and 15 seconds until news. So, if you're in any positions, you might want to take them off, maybe. A continuous institutional order flow model seems to be off these days. It will always get 1 to 2 and more, but far less take profits these 2 weeks. That doesn't mean it's a bad model. Maybe you're just employing it at the wrong times. Or in the wrong circumstances. You want to have multiple models that you can just pick what's price doing and which model is going to match that the best. Because no matter what model you're going to use, you always need to know where's price going to go and then how it's going to get there. And that's when you select the model that you want to use, like tools in a toolbox. You have a job, you want to achieve something, and you pick the tool that will get you closer to, or get you to achieve that thing. So in trading, if we're expecting us to run these pre-market highs, we can use a silver bullet entry, but a silver bullet didn't present itself because we have to wait until 950, and this was off the rip. So here we can use a first presented fair value gap entry. We can use just price action. We can use that inversion fair value gap, even though it's tiny. The idea that we're inverting all these PD arrays and we're reacting from key levels. I entered at 836, tight stop loss, got a 1 to 2 and then hit break even. 836. So your continuous institutional overflow model, like what is it? What are you doing with that model? You're just trying to trade the continuation. Yes, okay. Here's what I would do if I was taking a trade at 836. I would use optimal trade entry from this impulse price swing. Generally, if I'm looking for continuations in a moving trend, I'm always going to use optimal trade entry. If I'm using it after it's traded above a liquidity pool, I'm looking for displacement and then short-term discounts from like a lower time frame chart, a sub 1 minute chart. But if I'm trading a trending market like this, it's just trading in one direction, I'm getting an optimal trade entry. Here we have suspension block, we have optimal trade entry, and then I'm looking for my profit target with a fulcrum of that retracement into optimal trade entry. So if I take these extra measurements off, and I make this orange, okay, I'm just going to take the optimal trade entry off. So this is optimal trade entry. This is where you want to see it retrace into, because this is the impulse price swing. You can use this as well, that's fine. I'm just going to pick that. I will measure the Judas swing into optimal trade entry levels, and then that's my fulcrum, and then I'm targeting 1.5 and 2 standard deviations. That's how I trade continuous institutional order flow. It's very basic. You don't need CC stuff. Okay, that 10 a.m. candle wasn't really anything that crazy. A bit of a difference in the open, because we closed up here, and then we opened down here. 15 handle difference. You were targeting a 1 to 6. Well, maybe that's the problem. Even if we were just looking at liquidity pools, there's a nice one. And you're targeting a 1 to 6, that's crazy. Like a Dixie. Oh yeah. PMI can rip your face off. Proud to say that we've been calling the dollar higher all the way since the 24th of September from that 4-hour rally gap. We were originally looking at it as a market make buy model with these highs being original consolidation highs. It traded through that, and then we looked at, okay, what is it next going to go to? Well, we have these relative equal highs, and then we were looking at this daily fair value gap, plus the breaker block from that 4-hour chart, bodies stay within it, wicks the consequent encroachment of this daily fair value gap, suspension block, inverts, reclaimed, couple candles of consolidation, and then we just take off to the races, and we get beautiful price delivery. Beautiful price delivery. Okay, you want to see the bodies close outside the suspension block or in the upper half at least. Now that's not ideal. If you're long. I mean, it is in the upper quadrant, so it's fine, but with the amount of displacement we're getting up around here, you want it to stay outside the suspension block, but it's in the upper half, which is still valid, but you'd rather have it close outside of it. That'll be the most optimal sign of strength. Okay, the new week opening gap levels. We're trading within last week's new week opening gap, which is a 213.25 handle range from this low to this high. And I've got these dotted lines here. These are the quadrants of that new week opening gap. If you've been watching ICT's 2025 mentorship, where we've got this, well, it's not new, but the way he's teaching it and using it in unison with other PDRAs, that's kind of new. These levels, you're like, oh, they're just getting traded through. They're not doing anything. It's the PDRAs that are at these levels. You want to see them not be traded through. You want to see them left open, because a fair value gap that's left open is an indication of strength, and it's more likely to be left open if it's aligned with one of these quadrant levels. So here, when it's aligned with that quadrant level and it gets displaced through, that's your cue to expect it to be left open. Same with this one. And then there's no fair value gaps here. That tiny one, but we don't count it because it's tiny. So no trade so far for me. Yeah, I was waiting for 10 AM news as well. I think that's probably what you were waiting for. The CFD doesn't always make the volume bounces, so the suspension blocks don't always show up. Can you compare and still use them? There's no need. You can just stick to the CFD without using stuff from the futures chart. You can compare it and use them, but it's just too much effort for very little fruit, in my opinion. Even now, I don't look at ES and YM that much. I rarely do. I do glance at them occasionally, but I'm not analysing them. I'm not comparing the PDRAs that much. I'll just, okay, what's going on here? Okay, we've got these highs, we've got this, blah, blah, blah. Here we've got, okay, that fair value gap. These are all the highs I'm not taken yet. Okay, has NQ taken those highs? Yes, so that's a bit of a divergence. That's the limit on what I do for intermarket relations. I won't ever go into the CFD and compare it with the futures. If you're on the CFD, there's no need to go into the futures and compare it. It's not really of that much benefit. Yeah, I was waiting for 10 AM rule. 10 AM rules are rules, and I'm gambling about exactly. Same. We did call it higher into these relatively good highs, but I didn't take it because you've got to align the odds, align the probabilities. Okay, let's go back up to the 5-minute chart. There's that weird 10 o'clock candle. Staying in the upper. Okay, that wick stayed in the upper quadrant of the fair value gap, which is a good sign of strength, but it's the 10 AM candle, which was a news candle, so you take that with a bit of a grain of salt. Give this 30 seconds to close, and hopefully it closes above that 10 o'clock candle's opening price, and that would validate it as a bullish order block, which would be good for higher prices. By the way, chat like the stream to help V get his ammo. I don't get paid to live stream. Look what Zuzi said. I don't know what Zuzi said. I don't care what Zuzi said. Okay, we didn't close above it, so you want to grade this and just keep in mind to use 2 low levels, because that could be a swing point, and if it rejects like the lower quadrant, it could be a sign of weakness. but overall still bullish. And when I say a sign of weakness, I'm not saying it's going to completely go into the opposite end of the range. I'm saying you may have a little bit of a extended or a prolonged retracement, like a little bit of a deeper one below the suspension block, which is still valid for longs. It's just not best, if that makes sense. Okay, 15-minute chart. We've gone through the New York PM high from yesterday and the internal high. Now we've got the was not hugely relevant, but it's aligned with the new week opening gap high. Low high, low high, high. That's the breaker block for me. Now, yes, the breaker is technically this entire candle, and then yes, you can refine it to the bodies, the wicks. That's how I'm refining it. Are you surprised by this bullish delivery on NQ during the 9:42 to 10:15 macro? If you watched my market review yesterday, you wouldn't be. Price moved beautifully from the lower end. There's no such thing as a 9:42 macro. Pink Lambo. No. Black Lambo. Black Urus. I don't know, Zuzi makes a lot of stuff up. 9:42 to 10:15 macro. Nah. He'll say anything at this point. Like that 369 void number stuff was the most absurd bullcrap I've heard in my life. Because the way he dictates if this candle is going to be a 369 candle, there's an over 50% chance of doing it because he doesn't just use the candles from the minute. He'll add the hour sometimes, he'll add the first digit of the minute, and sometimes he'll use the second digit. Sometimes he'll add them and then combine them, and then there's a lot of stuff. And he just does whichever one suits the idea, oh, this is 369 candle, and then it's... Ah. I don't know how people fall for it. We've got a minute left on the 5-minute candle here, so we'll see if it wants to close higher or lower. V will get a copyright claim. Frank369. Is that what it's changed its name to? Here's an idiot, man. 9:36. Buy program of regular trading hours begins. 10:06. Upside objectives get met. 369 still doesn't work. He's good at marketing, though. I'll give him that. Yeah, 15k for a mentorship is insane. To learn bullshit. this. If we can see institutional order for entry drill here, that would be very, very nice. We are in the breaker, and the 1 minute chart, not the prettiest, to be honest. But I think in the next 15 minutes, this may give us an institutional order for entry drill and just trade higher. Not that you should be trading it because we're already in a very deep premium. What's the last drawing on the toolbar? It's I use it for midnight opening prices, so I go into this thing. So instead of having to manually plot out midnight like this, which takes ages, I'll go from midnight here, and I'll go to midnight here, and I've got every midnight price without me having to manually put them on. It just saves time. So like, I'm splitting the days up, basically. Because when I'm doing a classic buy-sell day, if I'm doing data collection on it, the easiest way to do that is by, well, the way to save time doing that is by doing this. And now I don't have to mark out each individual midnight, and all the days are split up very nicely for me. Like that's a classic sell day, 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 that's not. That's a classic buy day, that's a classic buy day, that's a classic buy day, that's a classic sell day. Yeah. 10.04 is a breaker. 10.04 low high. Not really. Not really. My target was yesterday's 12 o'clock for value gap. It's doing its job. Yeah, which time frame? One hour. Yeah, that's what I was gonna go to next. Yeah, nice. Okay, here's a thing I do to just not have too many rectangles on the chart, because I don't want to have a full fair value gap like this on a 15-minute chart, because it would clutter the, it's not nice to see. I'll put a line segment instead, and I'll put 15-minute FVG high. Doing blue. And that's obviously an institutional for entry drill. Did you see the bullish S&T with YM? It took the pre-market low. No, I didn't. It did not take the pre-market low. I took these lows though. It is an S&T, but it's not with the pre-market low. It's with these ones. Like all these. That's the S&T. Because here's a higher low, and then YM here we have a higher high. Sorry, a lower low. So liquidity void on the dollar, grade that. Staying in the upper half. I don't think that means it's gonna trade higher though, because the narrative is probably to fill it. Oh no, I'm just guessing. We don't trade the dollar anyways. Della Madalena or Makachev? I'll go Makachev. The New York AM is finished for me, CMPMC. Yeah, I got Makachev. I think Makachev can wrestle him. Della Madalena's got good grappling defense, but if you watch his fight with Gilbert Burns, uh, he's good at getting up, but I don't think he'll be good at getting up against Islam. And he's vulnerable to submissions. Return to 830 opening price. I don't use that, and a lot of people do. Is it gonna go back to and refer to 830? I just don't. I like midnight. Sometimes I do, but if there's 830 news, I'll consider it, but generally I don't even bother with it. Also the top of the opening range gap. The thing is, I want to see it be bullish on a 15-minute chart just because I'm looking at this as a market maker buy model. So this will be like sell side of the curve. Here's the reversal part, and that would be the low risk buy. And then here I want displacement. It reacts off this fair value gap, and then eventually this is the reaction to the gap. Trades higher into these relatively equal highs, and then it retracing into the 830 opening price at 25,561. 25,561 is a little bit deeper than I want it to go on the 15-minute chart, so I don't want to see it go to that 830 opening price. I don't think it will. I think this is good enough for an institutional to entry drill. Ideally, over the next 6 minutes, it trades above this candle's high and then makes that a bullish order block. Then it wouldn't want to return into the mitigation block here because it's left a fair value gap open. So if we make this a bullish order block, I'd expect it to just keep displacing above this high and this high. Well, this high at least, and then maybe this high. Yeah. No problem. Okay, there's that institutional for entry drill from the 15-minute chart. If you want to trade a 15-minute institutional for entry drill and you're doing it on a 1 minute, you have to be very careful that it's not going to double sweep you, because on a 1 minute, you might see it react like this and consider an institutional order for entry drill because you transpose the 15-minute fair value gap onto your 1 minute chart and you think that, oh, it's already wicked in, it's just going to run off now, like it's a 1 minute institutional order for entry drill. But then you go back to the 15-minute chart and it's like, no, it's actually just one movement down, because that fair value gap that it's reacting to with an institutional order for entry drill, that was a 15-minute gap. And then you go back to your 1 minute chart and you get confused, and sometimes you can make the mistake of treating it like a 1 minute fair value gap. That's just something to be aware of. I made that mistake loads. Then I realized that doesn't make sense. I will stay until we take out this high, because I believe that should be coming soon. Protected low. If it's going to be bullish, I don't want to see it take this low out, so that's protected low. Protected low. I'm not going to grade this beyond just eyeballing it now. I want to see us displace above this on a 1 minute and then either retest it on a 1 minute for support to keep trading through this wick, or just keep displacing all the way without retesting it. Okay, there's another gap, really clean gap. There's a unicorn, by the way. The valley gap, break a block. Is that? But if you're refining the breaker, then you go to the body and you can say, I left it open, so strength. But if you're using the wick, which is fine, then really clean entry. I'm going to take it off because, it's kind of cluttering. Okay, we have a 1 minute order block aligned with the wick low, the 5 minute wick low, but I don't know if we'll retest this. I think we should just trade high through it. Anyone tracking daily fair value gaps? Yes, I'm looking at this busy. You can grade the full candle range here, and you can say, okay, I'm looking for equilibrium of that to be delivered, instead of having the ambitious profit target of all the way looking at these highs. You can just look at this equilibrium, go to your 1 minute chart. Here's that equilibrium level. What's it aligned with? It's aligned with that 15 minute New York, yesterday's lunch high. So that would be a good target to take off a full trade. Plus, it's this one. Actually, I'd probably take it off at the new week opening gap high when it trades through this high. That seems like it makes the most sense. We'll take these wick levels off now just because we've wicked above it. This is the same concept, by the way. That 15 minute low, it's the exact same thing as what I just said on the 1 minute was protected low. See the logic where it trades into that gap, but this is a 15 minute gap. On a 15 minute it looks, oh, that's very ambitious to say that's a protected low because it's this close to market price. But if it's going to be bullish here, then it shouldn't want to trade all the way down to this low. If it trades down below this, you're going to get a deeper retracement, and then you'll have to do something else that constitutes buying. But if it's bullish right now, it's not going to take this low up. Okay, after just taking out a pool of sell side, plus it being the third drive higher, you want to be aware that this could be a fake 3 drives pattern. A 3 drives pattern, although we do make mention of it in our own ICT concepts, you have to remember that it's still a retail concept. They're seeing high, 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 and another high, high. They may look to short. It's going to give them something as bait to maybe make them get tempted into selling. And this even will trick an ICT trader because everyone's in 2022 mentorship where ICT mentions the 3 drives pattern. And they'll think, oh, it's a 3 drives close to liquidity, it's going to want to reverse from here. And then they may sell. But you have to be aware that of the high time frame narrative. Does it want to go higher or does it want to go lower? Ultimately, I think it still wants to go higher, so I wouldn't be selling that. But it is a good place to close your positions in case it does deliver to the sell side. Hurry up and deliver, please. I want to go. Just a second, my door's knocking. Hey. I'll probably jinx it now and crash the stream, but OBS seems to be working. It is working, yeah. I changed the encoder settings to be done with hardware. I think before it was being done with software. Now it's being done with hardware. So I think that fixed it. The protected lowers fair value gap on the lower quadrant of higher daily BISI. I assume you're talking about the this daily BISI. To that. Oh yeah, you're right. Oh, add the perfect. Oh, look at that. One tick away. Or 2 ticks away. It doesn't get better than that. Amazing. Okay, yes, failed to make a higher high, whereas Nasdaq did, but don't overcomplicate it. That's not SMT. That's just divergence. But it's not divergence in a way where it should reverse. It's just divergence where one of them has to catch up with the other one. There is some clear divergence on YM, but YM is typically going to have something like this, and it doesn't change the probabilities on the Nasdaq or on ES. So don't worry about it. I love candles like this, where you leave a long wick and a full-bodied up. That's a good sign of speed, especially that we make a bullish order block here. How do you tell when it's catch-up divergence? Yeah, so that's called Six Sister Theory. Narrative. That I can't simplify it and just give you one little trick, a little gem where you'll have a 100% rate with that. It's just experience, narrative, doing it enough times, and knowing where price wants to go. Because you'll get a lot, like there are going to be so many SMTs that would argue, or that would indicate it's going to go lower. Like that might be an S&T. That might be an S&T, but it doesn't change the narrative or where it's going to go. It just confirms an existing trade idea. So if you have the trade idea that NASDAQ wants to trade higher and ES wants to trade higher, then you would want a bullish S&T that would confirm that. You wouldn't place emphasis on a bearish S&T just because it exists. That's using PD arrays for the sake of using them. You want to have the narrative comes first. Where's price going to go? That always comes first. That's the only thing that should be going through your mind constantly. Where's price going to go? It's going higher into this analog level, all right? What ideas, what PD arrays can support that? Okay, a fair value gap may support that idea. A suspension block, a breaker block, an SMT. If we have an SMT at lows like this, that would be the SMT that would indicate it's going to trade higher in a speedy fashion with magnitude and a pronounced price move. So it's never like there's no magic trick. It's just where's price going? How's it going to get there? If one of them's taking longer, you'll know because it's just not there yet. But then you look at market structure. Does the market structure still support NASDAQ going into this high, even though there is a bearish S&T? Like that is a bearish S&T. So is this. That's bearish S&T. It gives us a little reaction, but it doesn't mean it's gonna completely outright reverse. It's just it exists, but it's not fitting the narrative of it trading higher because market structure and technical analysis indicates we're going into the NWOG high. So I wouldn't just say, as an S&T, I'm going to sell and throw all my analysis out the window because it exists. No. That's all I have for you, sorry. But an S&T, even if it's against the narrative, this is why they are really nice. It does tend to give you some kind of reaction. It can be a low probability S&T, completely diametrically opposed to the narrative. It can still many times give you some kind of price movement. So you have a bearish S&T, even though you're bullish, it can slow down price, or it can give you a short-term move lower. If you are trading, or if you see that on a weekly chart, or let's say on a daily chart, and we're bullish, say we're bullish, and then ES makes a high high, but NASDAQ makes a low high, and that's an S&T. On a daily chart, this enables you to have, 1 or 2 days of, even though I'm bullish, we may get a down close day following that S&T divergence. And then it's a daily S&T, it's completely against the trend, but it gives you the idea that this is going to be a down close day, and you can utilize that information to have a bias for that day. But that's not an everyday type thing. When it does happen though, you can get counter trend trades, and even if you're using a classic buy or sell day, you can really, really get nice trades that are against the trend and against every other bias that you have just because of one simple small S&T. That's private mentorship stuff. I don't know why I'm teaching you here. Okay, body closes at the low, and then it gets the rejection. That's good. Let's see the NWOG high reached into now, and then there we go. Easy, easy, easy. 1, 2, 3, ABC every single day. Baptizing these markets with ICT concepts and random buying and selling pressure with random lines and rectangles on the chart. That's how we predict the future. Alright, complete price delivery if you're in long positions. Not financial advice, but I would probably exit it here. Looks like we're running out of steam, and we may get a retracement with the lunch macro. We could keep trading higher. I'm not ruling that out, especially because I am bullish on the 15-minute chart. But you've got a huge share of that move now. You don't want to get out of it. It's the 369 void numbers. Obviously, this low is at 9.35. You do 5 at 3. That's 8 at 9. What's that? 8 at 9. 17. 17 is 7 plus 1. That's 8. Divided by 2 is 4. 2 plus 2 is 4. 4 plus 2 is 6. It's the 369 void numbers, obviously. Okay, we're going to end the stream here. GG everyone who caught those longs. If you didn't, don't worry. Just channel it. And see you tomorrow. Goodbye.